Everybody, welcome to Stockradar Stocks on the Move for another week. Today's date of the 26th September 2024. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, it's a short, sharp video today. I really want to try and keep you focused on what's there at the moment because really it is a very simple process. Our theme today is the Stock Market Challenge, a simple guide, okay? There are all sorts of things we can look at, fundamentals, news, expert opinion. Doesn't really matter, trying to collate all that information into one is really hard. What we need to do is focus on those things that matter, that will drive the returns that we need and that we want. Okay, so I'm going to go through that today. Firstly, the couple of positive thoughts are the markets are making new highs. US, Australian markets, and stock-specific targeting is what drives our returns. So there's a big pool of stocks out there that we cover, 180 or so. There are only 50 stock picks, which means there are a lot of stocks that are trending down trending down to sideways. So that means there's opportunities there, but it also means there's only a few stocks that really are that we need to focus on, and we don't have a lot of stocks in our portfolios. So that's how we work. Okay, so let's just go and have a look firstly at the top 10. Top 10 stocks. Now, there's a lot of top 10 ratings as we've had recently because there are a lot of stocks doing all the right things at the moment. But I looked today at Macquarie Bank, which has jumped out of the gate since it made new highs. Qantas is erring on new highs at the moment. TLX is doing incredibly well, as is Ansell. Pro Medicus just keeps going and going and going. 7 groups bounced up back to new highs again. Brambles is doing well, Net Wealth in trend, Suncorp's in a trend, ARB's in a trend. So there's just a few stocks there, and you can see Net Wealth there. That's the stock that had a little focus there today. It's had a really good run since it broke above 18. It's now just above 24, so there's $6 there since earlier this year, which is a pretty good run. So there for Net Wealth. Okay, so that's what that's doing. Our stock pick count is flat this week again, but we have lost 2 and we have gained 2. So although it's flat, there's always a little bit of movement going on in there for us, new opportunities, stocks that we might have to get out of, that sort of thing. So still 52 stock picks of 154 stocks altogether, and the whole group, including ETFs, is 67 of 178. Okay, so that's the stock pick count. That's where that's at the moment. Now we're going to go to the overseas markets firstly to have a look at how they're making new highs. There's not a lot to look at. The Dow's making new highs. It's come back a little touch this week, but really the corrections have been minimal, and it's making new high lows at the moment, and doing really well. Okay, the Nasdaq again, resilience is the word here. It looked like there was a bit of pressure going on it, but it's also bounced back through that lower high there and targeting the highs again, so that's good. We're seeing a bit of volume come back in there, which is good. Momentum still is above zero, although as we know the acceleration has slowed a little bit, but it looks okay to me at the moment. This is what bull markets do. They sort of, we'll have a little bit of a wobble, and then the buyers will come back in and bounce it back again. Eventually that will change, but for the moment the buyers are in control of these markets, and the S&P also, having stopped briefly at its high, has bounced back through it as well. So all those indices are looking good. We go to our market, and it's also looking very good. Down a bit this week. It'll be up a little bit today, but really we've got these high lows, high lows, high lows, high highs, high highs. And so that defines a trend for us. So that's a really simple thing to focus on, which is high highs and high lows. Okay, so the indices all look okay. Not that we trade the indices, but it's also good for a bit of sentiment. So let's look at the commodities now. Gold. Okay, well, it's self-explanatory. It's just making new highs. You can't fight these sort of things. Breaking high, uptrend intact, volume's good, momentum's good, all very sound there in the gold front. Copper, well, it's trying. It's the correction is a little bit weakish on the volume side there, but it's trying to break them. This is a sort of just a sentiment line really, but really we've got these highs up here which are going to be tough to get through. We've got a lot of resistance levels up here. So as far as copper goes, it's having a bit of a bounce, probably in the reaction to the fall. But really there's not a lot there for me to say, well, there's a lot of volume going through here. This looks really encouraging. Momentum's just holding above the zero level, which is encouraging. So we've really got mixed signals here on copper at the moment. So not too exciting at the moment. And Brent crude is just wallowing around those lows still. It's not really doing much. It's trying, but as you know, we can see from the petrol price there, it's just been going down, and the pressure is still down on that one there. Okay, so now We've gone through those overseas markets and commodities. All looks okay. Now, we're going to go through some stocks now. Just a few stocks this week because there's plenty there on Stockradar for you to have a look at, okay? But we looked at last week, we looked at a trend reversal, which was Westpac a long time ago, which made a good trading range, and we know what's happened to Westpac. Then we also looked at JB Hi-Fi, WiseTech, and Technology One. Now, they are all new high positions and have done really well since then. We also looked at three stocks called Qantas, Macquarie Bank, and ALS. Now, Macquarie Bank and Qantas have gone along pretty well. ALS has stumbled and fallen. Now, this is what can happen sometimes, okay? So we just need to recognise this. The stop's gone off, so we simply get out of it, okay, and move on. We've got our other stocks which are going well, like Macquarie Group and Qantas. So this is how it sort of works, really. You know, the majority of stocks will follow your trends, but there will be stocks that you will need to recognise as having stopped out and having failed, and you've got to get out of those stocks, okay? So that one, ALS, didn't go on this week, and that's just the way it is. This week, what I want to look at is just a few health stocks, because the health sector's been slowly getting back a bit better. CSL hasn't got anywhere yet, and Cochlear's come down, but some of the other stocks we've been looking at have done very well. So the ones that are trending up, firstly, we're going to look at Ansell. Okay, now it's up about 23% since we started this move here. We've got a trend reversal nicely down here, and then broke to new highs. Simple things, a simple trend reversal. It defined all those bits of information. It breaks it down all into one thing, which is called price. Okay, price never lies, and it tells you what to do. Okay, so it is going up, so we follow it. It's as simple as that. And when it does things like break resistance here, breaks resistance here, sits above the moving average. We have some very good volume showing up here. We've got great momentum. That is really the equation for me. Okay, it's very, very simple, and I don't look at anything else. So that's Ansell, which I'll just give you the name up here so you can see that. Ansell, trend intensity rating of 10, and every chance of moving on towards R1 up here, which is around $40, $42. Okay, so that's Ansell, which looks really good. The next health stock is Pro Medicus, which we know about, but gee whiz, what a great stock. And this is the behaviour. I just kind of try and show these things because this behaviour repeats itself all the time. Okay, and this is a growth stock, high PE stock, like WiseTech, but you can still trade them. You just need to be able to be nimble enough to recognise when the trend has stopped. Okay, we thought it might have stopped here on this big pullback here. We got out, we got back in on the new high. We got back in on the new high at about 106.80. And it's now about $168. So it's showing about a 60% return on that trade in itself at the moment. So we just do one thing only, is keep moving your stop up until it gets hit. And that's really the answer, okay? So that's Pro Medicus. We're just following that one. Telix Pharmaceuticals, another health stock. It's jumped, since it made a new high back early this year, it's now jumped to about 66%. It's gone from about $12 to $20. An enormous move. It's had a little bit of a shuffle around here, and but our stop has not been hit. Our stop is up around here somewhere, but it's trying to make new highs again and looking very, very strong. Volume picked up here on this bit of a rally. Momentum is still high on the scale. Slowed a little bit as this causes a bit of a slowing of momentum, but that's okay. The picture is still of an uptrend, and an uptrend that is intact. Okay, so that's Telix Pharmaceutical, which has done very, very well since we entered there. And then another one, Fisher & Paykel, which we've got to be a little bit careful about. We've made good money here on Fisher & Paykel. It's had a very good rally, and I know you've all followed me with this one for a while, as we've covered it for quite a long time, and you followed what has happened. And we can see here, we got the break here, and really, apart from this 1, 2, 3 week stance, it's really just been up, up, and up from around about $25.75 there, $26, now up around $34, and just coming back here now. We've got back to the old highs here. Okay, so this is a resistance level. Okay, the sellers have come out and they are appearing, and we can see them down here. We've got some good strong buying here, so we're in a bit of battleground territory where the sellers come to meet the buyers. Okay, so this is where we've got to make sure. The only thing we really need to do is not worry or not think about what is going to happen. We just have our stop set. If our stop is hit, we exit. If it's not hit, we stay in the market. So you'll have to go to Stockradar if you want to see where the stop is on Fisher & Paykel. But this is something that you've got to be very careful about. So we don't fall in love with stocks. It's gone up a long way. We've made a lot of money. Fisher & Paykel there, I think we're up about 25%, which is fantastic since May this year, which is a pretty good return. And we just need to make sure our stop protection is in place to protect this the money that we've made already. Okay, so that's Fisher and Paykel. Rating intensity rating is not 10; it should be about 8. Sorry, I should have updated that one, but I haven't done that. Okay, so there's 4 health stocks for you to look at that really have, if you just followed those 4 stocks, you'd be fine. Okay, they've done incredibly well, and you'll find there are always pockets in the market that if you go through my trading centre, you look at the commercial, service and supply sectors, you even look at the material sector, there's some great stocks in there that have done really well. And if you look at this next stock I'm going to look at, Sandfire, we've made some good money on this one already this year, but it's come back, it's corrected, it's now gone bang bang, it's risen from about $8 to $10 in the last 2 weeks, which is a bit of power, I would say. And you can see the volume here and momentum is still above 0 and starting to turn. So all the things are starting to align here. The average is pretty well supported around here, supported the price, and it's now gone higher. Trend intensity rating is not 10 because it's not an entry as yet, so that's still outdated that way, but it will be about a +2 or a +3, ready to confirm a new high break. And if we go back and have a look at this, we can see here that this really is a fairly significant area to get through, which has held the market down since 2013. Okay, now if we get a break here, it's something like, some of these big stocks that trend like CSLs at the moment, still in that big trading range. Macquarie Bank's just broken out of its trading range. There's lots of stocks doing it, so we just need to watch this and be observant and look at the price patterns, what they're telling us. And this is telling us that it wants to go higher, and if it confirms a break by making a new weekly high for us, then we run with it. Okay, so that's just some simple stocks. As I said before, the stock market challenge is a challenge, but it's a simple guide. Okay, it's a simple process, a simple way we should follow things to make our money. So, as we play the game, we will take controlled losses, but the biases, our biases are always to the upside. Okay, it's a bit like that. So the 3 stocks that I looked at last week: Macquarie Bank, Qantas, ALS. Okay, ALS has been stopped out. Macquarie Bank and Qantas are going ahead gangbusters. Okay, other opportunities this week: bounce back stocks like Seven Group, which has made a new high. James Hardie's getting very close to making a new high again. There are plenty more on Stockradar, looking at trend reversals like AFI, ASX, IPL, and even EBO, which is another health stock you can keep an eye on as well. Zero is approaching its highs at the moment, all-time highs, and that looks like an exciting opportunity. And you've got a stock like Aristocrat, which is up about 20% since July already after making its new high. So they're all there. We just got to watch what they do. When the signals come, we follow them, and we get stopped out, we follow those things as well. So, as we say, we run the strong and weed out the weak, and that's what we do. So we hold the strong, and if a weakness comes in, we get out of these stocks. That's the key. The key is process and discipline. Okay, so these are exciting times we're in at the moment, and it really is the time when it was so tough a couple of years ago to make money. Now we're back in this market, and it will end at some stage. Who knows where? Who knows how long? But we just live in the present and make sure that we're on these stocks at the moment that are going up, and because they can go a lot higher, as we know, and whether it be a Pro Medicus or a Telex, these stocks can just go through the roof and exceed all our expectations. Okay, so now I just want to go through quickly, just to recap what I'm talking about, with a couple of simple slides. Okay, this is not rocket science what we're doing. The stock market is not a complicated place. It is a simple place if we let it be. Okay, so that's really to keep that thought in your mind. You don't have to worry. You don't have to concern. As long as you've got those key parameters that you use to ensure you're on the right side of the market, then you'll be safe. So it is not rocket science. It's a simple method of holding the strong, those stocks that have trends, and weeding out the weak, the stocks that don't have trends, or if our stock goes off, okay, to protect our profits. Okay, so that's really easy. If we're in a trend, we run with it. If there's no trending, we're just not in it. Simply, like the stock pick count says, there are 52 stocks that are within a trend, and of the 154, so there's about 100 that aren't, or 102 that aren't. Okay, so it's not rocket science. The key words you need to confirm are: you must have a process. Know what to buy, and you'll know when to buy. Know what to sell, and know why you buy, and you'll know what to buy. Know why you sell, and you know what to sell. Okay, so you have that process, and you execute it with discipline. You don't get to that point where you say, "Ooh, Will I take this high? Will I take this stop? Well, not. The answer is you do. You just do it. You know my Nike motto: just do it. The big tick, and that will keep you safe. That will keep you safe. So this is the secret sauce, and if you do that, you can watch your equity grow. Okay. Now I've got to tell you, there are also times when the markets are tough. And that's just a fact you've got to recognise. And they don't always do that, but for the majority of time, if you look back over history, this market goes higher and higher and higher and higher. And that's what it does. And that's the lovely thing. And our stock market pays us little things like dividends on the way, just to keep us interested. Okay, and it's a fantastic, fantastic thing. So the stock market challenge is a simple guide for you to just make sure you keep focused on what you really need to look at. Okay, so you all know that you can go and have a look at my blog. You can take a free trial. I've got a special offer on at the moment of 15 months for 12 months if you want to take up a subscription. And also we run portfolios, of course, if you want to have a little bit of safety in there. 5 stock and 10 stock portfolios. Have a look at the results on the homepage. You can see that 5 stock bouncing back. The 10 stock is making new highs on an equity basis at the moment. So that's really good. So all the portfolios are performing again. Okay, so to finish off, we can bias our returns by holding the stocks going up in a trend, not down. The index managers hold all stocks that are going down. They just want to match the index or just outperform the index. Okay, we don't need to do that as retail people. We can just choose the stocks we want, and so we choose the ones that are going up, and that's how we work. So our performance is easy if we are disciplined, follow the process, and keep it simple. Okay, so that's really the short, sharp video today, just to keep you focused, keep it simple, follow your trends, and you'll be okay. So watch your trends, make sure you heed your stops, stay safe, and I'll see you all next week, and who knows what that will bring. Thanks very much.